Ever feel like some of the best investment opportunities are, kind of locked away?
Yeah.
Things like rare art or maybe a piece of a big real estate project?
Yeah, definitely feels that way sometimes. Inaccessible for most people.
Exactly. But what if technology could sort of give you the key, let you own a slice of those markets?
Well, that's really the promise behind tokenized assets, isn't it? It's this potentially disruptive idea.
It really is. And that's exactly what we're diving into today, specifically for you if you're an individual investor who's curious about how all this works.
Absolutely. And it's not just a small tweak we're talking about. It's potentially a whole new way of thinking about ownership, how it's structured, how it's traded.
Uh-huh.
So, yeah, if you're looking to diversify, maybe find new growth areas, understanding this stuff is becoming pretty important. We've looked through a whole range of material to try and, piece together a clear picture for you.
Okay, great. But before we get into the weeds, there's something really crucial we need to state up front.
Ah, yes. The disclaimer.
Right. Disclaimer. I am not a licensed financial advisor. The information provided here is for general informational purposes only and should not be considered investment advice. Always consult a qualified professional before making any financial decisions.
Couldn't be clear.
Mhm.
So, our mission today is really to give you a solid grounding in tokenized assets.
Okay.
We'll try to break down what they actually are, look at the benefits, the potential upsides for individual investors like you, but also talk about the risks, because there definitely are risks.
And the regulations too, right? That seems like a big piece of the puzzle.
A huge piece. It's complex, constantly changing. We'll navigate that as best we can based on our sources.
Okay, sounds good. Let's start at the beginning then. When we say tokenized assets, what are we actually talking about? What's the basic idea?
Okay, think of it this way. You've got a real-world asset. Could be anything, that painting you mentioned, a building, maybe even a racehorse, theoretically.
Uh-huh.
Tokenization takes that asset and converts the ownership rights into digital tokens. These tokens live on a blockchain platform.
Okay, blockchain. Like the technology behind cryptocurrencies.
Exactly the same underlying tech. It acts as the secure, shared digital ledger. Really transparent. It tracks exactly who owns which token, and therefore who owns a piece of the underlying asset.
So instead of needing, say, $5 million to buy an apartment building.
Right. You could potentially buy a few digital tokens representing a tiny fraction of that building for, maybe a few hundred or a few $1,000s. It breaks it down.
So it's fundamentally about taking these big, often hard-to-sell assets,
Yeah.
illiquid ones,
Yeah, often very illiquid.
and slicing them into these smaller digital pieces that more people can actually buy and sell.
Precisely. That's the core concept. Fractional ownership enabled by technology. And that simple idea has big consequences.
Like what?
Well, first, liquidity. By having potentially thousands of owners and the ability to trade these tokens easily, maybe on digital exchanges, the asset becomes much more liquid. Easier to buy, easier to sell.
Right. Compared to selling a whole building, which can take months or years.
Exactly. And second, it dramatically lowers the barrier to entry. Suddenly, investing in high-value assets isn't just for the super wealthy.
That seems like a huge deal for individual investors trying to diversify.
It really is. It opens doors to asset classes that were previously completely out of reach for most people's portfolios.
Now, I've also heard the term tokenized securities. How do they fit in? Are they different from, say, the shares I might buy through my online broker?
Good question. So tokenized securities are basically traditional financial instruments like stocks or bonds, but represented as tokens on a blockchain.
Okay.
They give you similar rights ownership in a company or the right to receive payments on a bond. But the process of trading them, clearing them, settling them, that can be much faster and more transparent because it's all happening on the blockchain.
So less paperwork, fewer intermediaries, maybe lower costs?
That's the potential, yes. Think of it as upgrading the financial plumbing to a more efficient digital system.
Interesting. Can you give us some specific examples from the sources? What kinds of things are actually being tokenized right now?
Yeah, absolutely. Real estate is a big one we've already touched on, breaking down commercial properties or apartment buildings into investable units.
Makes sense. What else?
Digital art is another area gaining traction, owning a fraction of a valuable digital artwork, but it goes beyond that.
Okay.
We're seeing experiments in traditional finance, too. Concord Bank, for instance, was looking into tokenizing things like bank deposits, bonds, and bills. Even if it's just R&D, it shows interest.
So established banks are looking at this.
Yes, and Tascom Bank also did some experimental work tokenizing corporate bonds. Again, early stages, but significant.
What about outside of pure finance or art?
Yeah.
Any more unusual examples?
Definitely. There's a startup called Agribon, started in 2023, that's tokenizing future agricultural yields.
Wow, okay. How does that work?
Farmers can essentially pre-sell a portion of their expected harvest as tokens. Investors buy the tokens,
Hmm,
providing the farmer with upfront capital. It's a novel financing method.
that's fascinating. Any others?
Uh-huh. In energy, there's Chain4Energy looking at tokenizing international energy supply contracts, trying to streamline that complex market.
Mm,
We've seen WePower use something called energy tokens as collateral for loans. And even Maersk, the shipping giant, has explored tokenizing accounts receivable.
so like tokenizing the money they're owed.
Exactly. Potentially improving their cash flow management by making those receivables tradable or easier to finance against.
It really shows the breadth of possibilities. Okay, so let's circle back to the individual investor. We've touched on some benefits, but let's really nail them down. Why should someone listening consider this space?
Right. Well, number one is clearly that increased liquidity we talked about, the potential ease of buying and selling these tokens compared to traditional alternatives.
Which is a big deal for assets that are normally hard to unload.
Huge deal. Then there's the lower barrier to entry. Fractional ownership just makes high-value assets accessible to far more people.
Right, democratization of investment, essentially. That's a good way to put it. Which leads to the third point, diversification. You can potentially add exposure to real estate, art, maybe even agriculture or energy contracts in smaller amounts, things that wouldn't normally be in a typical stock and bond portfolio.
And what about the transactions themselves? You mentioned speed and transparency.
Yes, because it's on a blockchain, the record keeping is generally very robust and transparent. Transactions can often settle much faster than traditional systems, which might take days, and potentially with fewer intermediaries, which could mean lower costs.
Okay, that all sounds quite positive. But realistically, there have to be downsides, right? What are the major risks and challenges people need to be aware of?
Absolutely. Caution is definitely needed. A really big one is regulatory uncertainty.
Ah, the rules haven't caught up yet.
In many places, no, or they're still being figured out. What's a security? What's a commodity? How are these platforms regulated? This lack of clarity creates risk.
But you mentioned things like MiCA in the EU, so there's movement. Yes, definitely. Things like MiCA are trying to establish clear rules for crypto asset issuers and service providers, aiming for stability, transparency, consumer protection. But it's an ongoing process, and it varies hugely by country.
Okay. What other risks? Cybersecurity must be one.
Always a concern in the digital asset world, yes. The security of the blockchain itself is usually strong, but the platforms, the exchanges, your own digital wallet, those can be vulnerable points. Hacks, scams, they definitely happen.
And what about liquidity? You said it's a benefit, but is it guaranteed?
That's a crucial distinction. Tokenization enables greater liquidity, but it doesn't guarantee it for every single tokenized asset.
So you might tokenize something obscure, and still nobody wants to buy the token.
Exactly. Liquidity depends on market interest, trading volume, the quality of the underlying asset, the reputation of the issuer. It's not automatic. Some tokens might still be hard to sell.
And I guess underlying all of this is trust, right? Trust in the technology, the issuer, the platform.
Absolutely critical. You need to trust that the token actually represents the underlying asset, that the platform is secure, that the issuer is legitimate. Due diligence is key.
You mentioned the regulations are evolving. Can you give us a bit more flavor of how different parts of the world are tackling this? You mentioned the EU's MiCA.
Right. MiCA is a big step in Europe, aiming for that harmonized framework, more clarity, consumer protection, stability. That's the goal anyway.
And the US. It often seems more complicated there.
It can be, yeah. Regulation is more fragmented. You have different agencies like the SEC and the CFTC, sometimes with overlapping jurisdiction and different views on whether a digital asset is a security, a commodity, or something else.
So less certainty for businesses and investors.
It can certainly feel that way sometimes. It's a multi-level system, state and federal, which adds complexity.
What about other major regions? Are there interesting approaches elsewhere?
Yeah, definitely. The UK has used regulatory sandboxes quite effectively.
Sandboxes, like a testing ground.
Exactly. Letting fintech firms test new products, including tokenization projects, in a controlled environment with regulatory oversight. It encourages innovation while managing risk.
Interesting approach.
Then you have places like South Korea, which has focused on licensing requirements for exchanges. Japan was actually quite early in recognizing Bitcoin as legal tender and has been building out its crypto regulations.
And Singapore. often seen as a fintech hub.
Right. Singapore has its Payment Services Act, which provides a framework for regulating digital payment tokens and related services. And even Ukraine, as of 2023, moved to legally define digital assets. So lots of activity globally, but definitely not one single approach.
It really paints a picture of a landscape that's still under construction, legally speaking.
Very much so, a dynamic space.
Okay, let's revisit those real-world examples. We talked about real estate and art becoming more accessible through fractional ownership.
Yes, those are probably the most intuitive examples for many people.
But you also mentioned established financial players getting involved now, beyond just experiments.
Right. We're seeing major banks build dedicated platforms. HSBC's Orion, for example, has handled tokenized bonds, even tokenized gold.
Tokenized gold, wow.
Yeah. JP Morgan has its Onyx platform working on various asset tokenization projects. Goldman Sachs developed GSDAP for digital bonds and other tokenized assets.
So this isn't just a niche crypto thing anymore. Wall Street is actively building infrastructure for it.
That's a very clear signal, yes. They see the potential efficiencies and new market opportunities.
And outside finance, we touched on Energy.
Exactly. Maersk looking at tokenizing accounts receivable in supply chains, WePower using energy tokens for loans, Chain4Energy tokenizing energy contracts, and Agribon using tokens to fund future harvests.
It really shows the versatility.
Yeah.
If you can define rights to an asset or a future cash flow, maybe you can tokenize it.
That seems to be the direction things are heading. The potential applications are incredibly broad.
Now, one more connection I wanted to explore is with decentralized finance, or DeFi. How do tokenized assets fit into that world?
They fit quite naturally, actually. DeFi aims to build financial services, lending, borrowing, trading on blockchain, without traditional banks or brokers.
Peer-to-peer finance, essentially.
Kind of, yes. Using smart contracts to automate everything, so tokenized assets can potentially be plugged right into these DeFi platforms.
So could I, use my token representing a piece of real estate as collateral to borrow stablecoins on a DeFi platform?
That's the vision, and technically possible. We're still in the early stages of seeing real-world assets widely used as collateral on major DeFi lending platforms like MakerDAO or Aave. There are complexities around valuation, legal recourse, things like that.
Okay, so it's not quite mainstream yet within DeFi.
Not for real-world assets as collateral, no, but the infrastructure allows for it. And we do see platforms like Trustee Plus using smart contracts for decentralized exchanges and staking involving various digital assets. The integration is happening step by step.
Okay, we have covered a huge amount today. If you had to boil it down, what are the absolute key takeaways for someone listening who's thinking about tokenized assets?
All right, well, first, tokenized assets are digital representations of real-world things on a blockchain. Simple concept.
Got it.
Second, the big potential benefits are increased liquidity, easier access through fractional ownership, faster, more transparent transactions, and new ways to diversify your investments.
The upsides.
Exactly. Third, be very aware of the risks. Regulatory uncertainty is key, cybersecurity is crucial, liquidity isn't guaranteed for every token, and trust in the issuer and platform is paramount.
Okay, benefits and risks. Clear.
Yeah. It's about balancing that potential against the very real challenges in this evolving space.
So as this trend continues and we see more and more things potentially getting tokenized, what's a final thought you'd leave our listener with?
I'd say start thinking about how this could reshape your own investment approach. It might open up possibilities you never had before. Keep an eye on how the regulations develop. That will be critical. And maybe ask yourself, what kinds of real-world assets currently out of your reach would you be most interested in seeing tokenized? Thinking about that really highlights the potential impact this could have, not just for you, but for market access and efficiency overall.